Good afternoon, everyone, and welcome to Stock Market Today. It's Coram and Ken Shreve here with a breakdown of the action in today's session, where we saw a really tough day for growth stocks, Ken.
Yes, we did. I mean, you look at the Nasdaq's 1.1% decline and just a little test of the 10-day moving average, and you really don't get a feel for how sharp the selling was in tech land today. But we'll take a look at three stocks. First of all, a bad break outside of the technology sector for Deere, ticker DE, and then two stocks in the tech sector that held up pretty well today. Juniper Networks, a very strong industry group, and also in the chip group, RMBS.
Okay, we'll get to those stocks, but first, let's take a look at the major indexes. So the Nasdaq today down 1.1% by sessions close, definitely the hardest hit. We also had the Russell 2000 down about 1% today. Less hard hit was the S&P 500 off just by 0.25%, and then the Dow was actually positive by about 0.25%, so holding up much better. If you look at the Nasdaq Composite, Ken, not a ton of damage or even unexpected action. It's just coming down to the 10-day moving average, finding support there, a pullback expected after the strong move off of the mid-March lows. But it was really underneath the surface where a lot of the pain was felt.
Absolutely. Yeah, lots of our leaderboard model growth portfolio had some losses. We didn't take a lot of steps today. We lowered our exposure a little bit, but yeah, just a lot of stocks down 4, 5, 6%. Some cases even more. But when you look at the Nasdaq Composite, this is just seems to be a relatively normal pullback. We have higher volume. It looks like today, at least according to preliminary data. So we could see a distribution day for the Nasdaq, a higher volume decline, maybe a subtle sign of institutional selling. But since the follow-through day that we recently saw, we really have seen not much in the way of distribution and pretty good action in individual stocks. So tough selling in the growth space today, but really just looks kind of like a normal test for the Nasdaq of the 10-day moving average here.
Yes. Okay. Well, let's also take a look at the S&P 500. Zero S&P 5, really not too big of a dent here, and the S&P holding above all of its major moving averages, which I guess can maybe, if we are to see a little bit more of a pullback, we could expect to see the S&P coming down to the 50-day line, the 21-day line, all right around that 4,000 level.
Yeah, it's possible, and I don't even think it would be, it wouldn't even be a broken index if it were to come down to the 50-day and test the 4,000 level. Now, if there's a violent break, yeah, maybe the index is looking a little more worse for the wear, but you can see it's just a little pullback here and holding above short-term support levels. So most of the selling in technology today and the NYSE indexes, including the Dow, I think the Dow even ended with a marginal gain today. So not much selling in the NYSE indexes. It's just the Nasdaq that took the hit.
Yeah, exactly. Seeing a lot of strength in the Dow as of late. But so with this rotation that we're seeing, hold on. So with this rotation that we are seeing, maybe, do you think that we should be following this leadership over to the Dow, or should we be sticking with looking at the tech area for a lot of our watch list stocks?
Yeah, I mean, I think that we definitely have a tech weighting on leaderboard, so we've been kind of trimming back our exposure, but we still have a lot of leading technology stocks that are not flashing sell signals. So we're just kind of following a process here, and if we see sell signals, we'll follow them. But we're still holding on to 12 stocks on the leaders list, and like I said, I mean, the market right now, it's all of a sudden concerns back on the economy, and you had money flowing into bonds again today, another drop in bond yields. You have gold rallying, you have healthcare stocks outperforming. So the market is really kind of preparing for perhaps a sharper than expected slowdown here, and it really just remains to be seen gain. But this worry about the financial stocks, it's just a lot of headwinds for the market here. So there was a point where, technology stocks didn't mind bond yields coming lower because they were selling off when bond yields were ramping higher. But now this just consistent money flow into bonds is just the market's way of saying that it is, preparing for a recession. The question is how steep is it going to be? And you can see that 10-year yield hitting lows not seen since last August or September.
Yeah, definitely something for us to keep in mind. Let's also take a look at some ETFs that give a little bit more color to what we were seeing underneath the surface today. So here's a look at XLV. This is the healthcare sector ETF, and money definitely flowing here today, Ken, with XLV up 1.8%.
Yeah, definitely. And, United Health, UNH, we're going to hear from earnings from them next week. They got an upgrade today. Pretty good comment from, or pretty good news from Medicare payments earlier in the week. So UNH is, a really strong performer in healthcare. And you can see this ETF XLV just really had no problems, plowing right through that 130 level. It's back above its key moving averages. I mean, buying up here feels like you'd be chasing it a little bit, but just a good picture of what rotation into the healthcare sector looks like here. And healthcare stocks typically are, an inflation hedge, almost just like gold is. So not surprising to see healthcare outperforming here.
Right. And then GLD, gold stocks, still holding right at recent highs. And if we even take a look at a monthly chart here, Ken, GLD is on the verge of getting to new all-time highs, it looks like.
Yeah, I mean the price
Right there.
of gold. Yeah, the price of gold bullion over 2,000 an ounce. I mean, at one point this morning it was almost only about $30, $35 from an all-time high that it set back, I think, in 2020. So, yeah, gold looks like it could be in the early stages of a breakout here. RGLD is a name that we're holding on leaderboard, and that one is had a nice day today. The weekly charts got nice several up weeks in a row and performing well.
Okay, moving on. We also want to take a look at SMH because with the strength in the technology sector, chip stocks have been a bright spot, but really felt the pain today. But if you take a look at SMH here, we are seeing a test of the 21-day line, which we did get recently. So, Ken, this could be a critical juncture. Will chips and SMH here continue to find support, or are we going to get a pullback and a test of the 50-day line next?
Yeah, exactly. So we talked about the Nasdaq just kind of testing its 10-day moving average, and you have SMH here not broken by any means as it holds right at that 21-day moving average. So it is kind of do or die time here. Again, a lot of the declines I would note today, even though we saw a lot of stocks in the market, Smith Growth 250 down 4, 5, 6, 7%. A lot of these declines were in light volume. So we are in a shortened week of trading. Market will be closed on Good Friday. So it's kind of a low volume period for the market. So any little bit of selling pressure that picks up in some of these leading growth stocks, it can really kind of snowball. So even though a lot of declines were in light volume, we did not get a lot of sell signals today. So at least we can hang our hat on that. And the bottom line is that we're still in a confirmed uptrend. So we have to respect that, and can't get too bearish just because we saw so much harsh selling in the growth space. I think tomorrow will be an important day for the market. Probably will be a low volume session again, but hopefully we can kind of move off lows here.
Yeah, we'll have to see and continue to take things one day at a time. Okay, let's take a look at some stocks here. Deere, ticker DE, really falling apart, now below its 200-day line. So first break below its 200-day line and trade below the 200-day line in a number of months, Ken, down 6% in above average volume. So the selling wasn't just limited to technology today.
No, and this is a little bit concerning, for the market to see a high quality name like Deere. We talked about a lot of low volume declines in the tech sector today, but Deere, as you just mentioned, volume was double its average today. It broke through this, longer term support level, the 200-day moving average. So, lesson here is, this is a stock that, the signs of institutional selling have been there for several weeks now, and you want to be careful of kind of buying these, what many believe to be high quality stocks on sale here. It's very dangerous to buy a stock when institutions are selling. So if you want to come back to Deere at some point, that's fine. But the stock is kind of indicative of the way the market is worried about the economy here. We got the ADP private employment report this morning, which showed some softness in the labor market. Yesterday, we had the JOLTS job openings at their lowest level in nearly 2 years. So maybe these interest rate hikes by the Fed are starting to work, but if it's going to cause a real sharp slowdown here, again, Deere is showing the market's worries here.
Yeah. And let's also take a look at Juniper Networks, JNPR, because computer networking stocks have been looking pretty interesting, including Juniper. So holding near highs here. So the relative strength that it's been showing as of late is continuing, and it's right on the verge of a breakout area.
Yeah, and of course, Arista Networks, ANET
Mhm.
is kind of the leader among these networking stocks. But you gotta, and you can see how well Arista has been performing. But Juniper and the strength in this group really, I don't think should be ignored. I know you guys talked about it on IBD Live this morning. But back to Juniper, I mean, this is a pretty healthy technical setup here. The fact that the stock has rallied so sharply from the 30 level and really has not given up any ground, and you got pretty good earnings estimates here. Recent growth, nothing extraordinary, but I like those earnings estimates, and estimates have been going higher. So I think this is definitely a technology name you want to keep an eye on, not only because of the strong technicals here, but because the group is filled with strong performing stocks, as well as Cisco, CSCO, which is also showing relative strength in the market here.
That it is. And last but not least, let's talk about RMBS. This is in the chip sector, so down about 4% this week. But looking at the daily chart, chip stock that was up on the day. So that's impressive, Ken.
Pretty impressive, yeah. And I mean, normally a 4% weekly decline isn't great. We've got one more day to go in the shortened week, but again, this is a leading stock. It's a leaderboard stock. It's one of the leaders in the chip sector, and today's price action showed you why. Because a lot of chip stocks were down sharply today, but this one reversed slightly higher. You see that initial breakout came in very, very heavy volume. So still like the technical look of Rambus. Fundamentals are outstanding, as this company's got a big presence in data center chips. So this is still one of the better looking names in the chip group for sure.
Yes, it is. All right, everyone. Well, that is it for today's show. Thank you so much for tuning in. We will be back tomorrow morning on IBD Live for the latest stock market news and analysis. So we will see you there, investors.com/IBD Live for all those details. We'll see you right back here tomorrow afternoon. Thanks, everyone.